All right, and we are live. Hey everybody, Smart Silver Stacker here. Hope you're doing well. Got a lot to talk to you about today. We have got a massive crisis that is brewing, and yet investors don't even seem to be aware of this, that we are being set up for a massive economic crisis. Of course, we've got the world on edge, lots of geopolitical events occurring. We're going to discuss some of those today. I want to delve into some of the numbers regarding the U.S. debt recently because they are getting to truly alarming proportions. And let's start off today just here with the national debt. We're at $33.5 trillion, $33.5 trillion in debt now. And the pace at which this is expanding is just mind-boggling. We're going to break it down in just a moment. But let's get into the geopolitical stuff first, because I know that's kind of at the top of everybody's mind at the moment. See a few folks in the chat there saying hello, welcome to the live stream. Hello. Going to talk about a lot of things today. First, here's a headline from USA Today. Is Iran behind Hamas terrorist attacks? What would it mean for U.S. and Middle East security? So, short answer is it would mean that we're going to spend a lot of money fighting in the Middle East, and there could be a broader regional conflict, and energy prices and inflation will soar if this does turn out to be the case. Now, at the moment, it seems to be, at least from my perspective, there's a little bit of division here. We've got some folks like Lindsey Graham taking a very bellicose approach, saying, if Iran was involved, we're going to bomb their oil facilities, their oil infrastructure, which, of course, would incite a massive conflict. Then you've got the administration that's in the White House right now. They seem to be a little bit more hesitant to involve Iran in this conflict. And I think the reason is because they got an election coming up next year, and if oil prices and inflation run out of control, that's going to be a real problem for the incumbent administration. So that's the dynamic that we have playing out there. But let's take a look at some of the first trading that we're seeing in the U.S. debt market following the events of this weekend, because yesterday was Columbus Day or Indigenous Peoples Day, whichever you happen to celebrate, and the bond market was closed. But today, look at this. The 10-year yield dropping by almost 3.5%. That is a big move down, and this is a good thing for the bond market, ostensibly. Hey, Scott. See Scott saying hi in the chat there. Hello to everybody tuning in. Hey, do me a favor. Smash the like button for me. It's a simple thing that you can help to do to support this channel, and it really helps get this information out there. So the bond market today not continuing the massive sell-off that we had been witnessing for some time. I mean, if we look at the 6-month chart, you can see the magnitude of the sell-off that has occurred. And keep in mind that as the yield on this debt instrument, the 10-year treasury, rises, the value of the underlying bonds declines. So as the yield goes up, that means that bonds are selling off and declining in value. Well, today, someone is buying bonds. Now, there's a few things at play here. One, I believe that this may be a bit of a safe haven play. Investors still perceive these things as the safest instrument out there, despite the fact that they have been selling off so massively lately. But also the fact that should the U.S. become involved in this war, which is seeming almost certain at this point, there will be a lot of liquidity injected into the system. The debt crisis that we had been facing may be staved off a bit now, and that's why this yield is coming down. But I am almost certain that this is a temporary reprieve only, and that we are going to see this sell-off continue in a very significant way moving forward. There's a few reasons. One, inflation is likely to continue up. We've got oil has, actually, it's a little in the red today, which is kind of weird, but we did see a significant move up yesterday. I really don't think investors are pricing in the amount of risk now that exists in the Middle East. But inflation is likely to continue to climb, one, from the massive amounts of money that is being borrowed from the future and spent into the now in the form of deficit spending, and also because of higher energy prices. Now, when inflation moves up, that applies an upward pressure to bond yields, because to get investors to buy these paper instruments with a yield, the higher inflation goes, the higher the yield has to be to compensate for that loss of purchasing power. If inflation's at 4%, you're not going to buy a bond for 3%, right? It doesn't make any sense, because you're losing money on that you're losing 1% of your purchasing power. So the yields will continue to move up as inflation moves higher. Also, I think that this, flight to safety into bonds, eventually investors are going to realize that paper is not the place to be. And when that happens, we're going to see money flowing into other markets as safe havens, notably gold and silver, which are doing pretty well today. We can take a look here at the SD Bullion gold chart. You can see gold back up to 1872. Silver just kind of hanging out right around 22 bucks. Did catch a little bit of a bid yesterday, and it looks like there is some safe haven buying to me, although it's still pretty minimal. And again, it seems like investors are kind of ignoring the level of risk that we now face as the Middle East degenerates into one of the biggest conflicts since the 1970s. You know, the risk for existential events, for black swans, just went up dramatically with the advent of this conflict in the Middle East. I mean, one thing we need to be looking out for domestically here is, this coming to our shores. Certainly, that's a real possibility, and that could create a huge amount of change in a very short period of time. Should we witness something like that? I mean, God forbid that something like that happens, but something we all need to be on the lookout for. There's a lot of things at play now, and as we witnessed over the weekend, things can happen very shortly. And to that last question, what if Iran was complicit in this? Well, a lot of people are now calling this Israel's 9/11, and you remember what happened after 9/11? The debts exploded. There was 2 significant wars launched, some that just wrapped up. So if this truly is a 9/11 type event, we are going to need to be very circumspect moving forward. And I think that the safe haven bid for the precious metals could accelerate dramatically. Now, before we get into some more information on these topics, I want to take a look at the Debt to the Penny website here. Now, this is part of why the bond sell-off, I think, is almost guaranteed to continue. Rising rates continue to move up because, part of what has been driving the sell-off is the massive expansion in the supply of U.S. treasuries. Every time the government borrows money, they sell these treasuries onto the market. And obviously, if you're selling an enormous quantity of something onto the market, the price is going to drop and the yield then moves up as the value of the bonds declines. But let's take a look at some historical numbers here. So this is from the Treasury, gives you the debt down to the penny on a day-by-day update. So I want to go back to this day right here, September 14th, 2023, when the public national debt was $32.988 trillion. Okay, so let's go to the next day, September 15th. That's the first day that we actually crossed the $33 trillion line. Okay, so that was September 15th. Now we'll fast forward to today. The most recent data we have is for October 5th. And you can see that's the day that we crossed $33.5 trillion. So that's a 20-day period of time. Now we're going to do a little math here just to kind of expand on this for you. Let me pull up my calculator here. Now, if you can see the calculator, put a 1 in the chat. That would help me out. Make sure I'm not just talking here. I'm not the best with tech stuff. So we got the calculator out. Now, we've got $500 trillion, $500 billion. Haven't hit trillion dollar level yet. But $500 billion in a period of 20 days. So divide that by 20, and that gives us $25 billion per day. Okay, now let's just extrapolate some stuff from this. This is the pace over the past 20 days at which the national debt has been increasing, $25 billion a day. Well, let's just annualize that. Multiply that by 365 days. You're talking about $9.12 trillion. Is that even possible to run a deficit like that for a sustained period of time? I don't think it is. But here's the thing. The deficit is likely to continue expanding very rapidly, especially in light of this new conflict in the Middle East. Now, I suppose it's possible to run a $9 trillion deficit in a year, but to me that almost guarantees that we are at the end phase of this currency. I mean, you can only abuse your privilege as the world's reserve currency for so long before something gives out. And if we truly are taking on debt at this level, and it's not going to slow down anytime soon, well, massive spikes in rates are right around the corner. Massive inflation is right around the corner. This is the kind of thing that can really trigger a stagflationary collapse. So I just want to point out how fast the U.S. national debt is rising at this point. I mean, it's truly unbelievable stuff. And here's an example of why that's going to continue. Here's a headline from October 7th. Biden may seek $100 billion aid package for Ukraine. He's trying to secure enough aid for Ukraine to try to last through the 2024 election is what's going on. But another $100 billion? I mean, I don't know how much money we're going to end up spending in this war in the Middle East. It could end up being trillions of dollars if Iran gets involved. I mean, we've already deployed an aircraft carrier and everything that goes along with that. But that's just the beginning, folks. I mean, this is going to be a huge problem. But, something that I think we all need to look at. Sometimes I see some pithy comments in the chat about, we just need to, show those people in the Middle East who's boss, etc. Listen, that didn't work out too well the first time around following September 11th, the invasion of Afghanistan and Iraq. And if you want to get an idea of just how ineffective these foreign interventions are, look at this story. Israel, U.S. arms left in Afghanistan reach Gaza. Now, notably, this is an article from the Middle East Monitor from back in June. Okay, so this was way predating this conflict, although I suppose given the scale and preparedness of the attack launched by Hamas on Israel, maybe this was in the works back then. But I mean, look at these. These are weapons left by the U.S. in Afghanistan, billions and billions of dollars worth of weaponry left in Afghanistan that reached Gaza. Guaranteed some U.S. weapons were probably used. I mean, I can't speak categorically. I don't have evidence of that, but I would say it's very likely that some of the weapons that Hamas used were U.S. manufactured weapons paid for with your tax dollars that were left behind in Afghanistan and then made their way down there because, they're being sold on the black market. So, when you look at $33.5 trillion that, you're on the hook for if you're a U.S. taxpayer, don't forget that. This isn't the government's debt. I mean, the government isn't a thing. It's just, a proxy for all of us taxpayers. The debt is guaranteed by the tax base. So when you see that hitting $33.5 trillion and you see the president asking for another $100 billion of weapons to flow to Ukraine now, just keep this picture in mind. Think about this. Think about your tax dollars funding both sides of these conflicts and, lining the pockets of some Ukrainian, Afghani individuals at the same time. And it's not just the conflict in Afghanistan. Here's a story from June from Newsweek. Israel worries U.S. weapons for Ukraine are ending up in Iran's hands. And again, these weapons, they go over there with very little oversight and they end up getting sold on the black market. I mean, we should be careful here domestically that these weapons have been sold around the world. They could easily be entering through our porous southern border. I mean, who knows? When I say that we need to worry about, this conflict expanding to the U.S. homeland, that is a real risk here, and it's made worse by the fact that all of these powerful weapons are now floating around the black market, paid for by Uncle Sam, paid for by yours truly, paid for by you if you're a taxpayer. So, before you get all raw about the U.S. going over there, and one of the comments I see people say is, Iran's about to find out why the U.S. doesn't have free healthcare. And I mean, that is kind of a humorous, pithy observation in some ways, but I mean, it's really kind of sad when you examine it and frightening when you examine it in more depth. And it's not really that funny at all. Maybe a kind of gallows humor, if anything, which, I know people do adopt during times of conflict, but we don't need to be getting involved in these conflicts, but we're going to, very likely. I mean, you see those hawks like the Lindsey Grahams of the world, the military-industrial complex shills who are going to push for this, and they're going to get us all involved, and we're going to foot the bill for it. So the point is, though, that the national debt, despite the fact that it's expanding at a pace of about $9 trillion annually, if you annualize the current pace over the past 20 days, this isn't going to slow down anytime soon. And that's why you want to have gold and silver, folks. You want to have money, real hard money, that cannot be printed. Because ultimately, all of this, who's going to buy this debt? You see yields spike up. Who's going to buy it? Well, it's the Federal Reserve. They're going to monetize the debt. It's the only way that this kind of spending can be maintained, especially to the tune of $9 trillion annually. I mean, there's no way that you can do that without printing the currency. There just isn't enough wealth to tax. And so, currency devaluation is baked into the cake. And the fact that right now investors don't seem to be taking the hint. I mean, they're bidding up gold a little bit, but gold's still pretty cheap. I mean, it had a big pullback. Same with silver. To me, you can't get enough of that stuff. I mean, could they still come down? Well, maybe, but I think that given the market action that we're seeing here, The only way we're going to see the price of gold and silver fall is if there is some kind of a black swan pan sell-off event. Otherwise, I think they've hit a bottom. I'll go on record saying I think they're done with the sell-off unless we get a massive economic crisis, which, is still in the cards, could still well happen. I don't think we've staved that off just yet, just because all the war money has flown into markets and stocks are catching a bid right now because of all the money that is being created out of all this. We're not out of harm's way. I mean, in fact, all of this spending going on now, ultimately it's going to make this crisis much worse. So we got to be getting ready for that. Now, there's one other story I wanted to get into today. By the way, if you buy gold and silver, check out sdbullion.com. That's where I buy my gold and silver. Right now you can get gold or silver at spot if you're a new customer by visiting sdbullion.com/news. So check that out if you've never shopped with them before. Otherwise, they got some other great deals on their deal tab. Now, here's a story that is going to impact all of us, and not necessarily this specific story, but this trend is going to be very important. So this is a story that recently broke. The Estonian Navy searching for Baltic Connector gas leak location. So there's a gas pipeline, an undersea pipeline from Estonia to Finland, 77 kilometers long, and it was leaking the other day. So, does that sound familiar? Kind of sounds like the Nord Stream pipeline, which, according to the Pulitzer Prize-winning journalist, I think it's a Pulitzer Prize, correct me if I'm wrong on that, but, this guy who uncovered the My Lai massacre and everything as a journalist tells us that the Nord Stream was intentionally blown up by, you-know-who. Well, who do you think is responsible for this? Because according to the most recent report from Reuters, Finland now says outside activity likely damaged the gas pipeline. So, again, this in and of itself will likely lead to higher energy prices, especially over in Europe. But the point is, infrastructure is now being targeted. And they point out here in this article that the officials who were being quoted said that the damage is too extensive to here, I'll read it to you. It is likely that damage to both the gas pipeline and the communication cable is the result of outside activity. The cause of the damage is not yet clear. The investigation continues in cooperation. Basically, they're saying, I don't know where the statement is in this article, but that you would require special knowledge to carry out a sabotage like this. So, basically, it's not just your average Joe with a diving mask going down and damaging this thing. It's probably a state actor. So, who was it? Who's damaging NATO gas infrastructure? Well, I mean, it's anybody's guess. You leave me an idea in the chat if you have some thoughts on who this is. But the point is that as this conflict gets worse, this is what I'm talking about. We need to constantly be vigilant about this sort of thing. And, there's very likely we won't be able to do anything about it, but infrastructure is being targeted. Cyber attacks are ongoing right now. Both Palestinian and Israeli infrastructure is being targeted with cyber attacks. So this is all the sort of thing that very likely could reach us here in the West, even in the U.S., in the very near future. And so, be vigilant, be prepared for this, get as independent of systems of support as you can, because those systems of support may be offline for a while or may be targeted. I'm going to go to the chat here. I got a question. Hey, Smart Silver Stacker, can you explain exactly how we would get into conflict with Iran? I'm a little confused on who they are funding. Also, if we get into conflict with Iran, would we also be in conflict with Saudi Arabia? Okay, so, I'll touch on this real quick. So, Hamas, organization operating out of Gaza, they're the folks who launched these attacks on Israel over the weekend, these sneak attacks. And there's also in Lebanon, to the north, you've got Hezbollah. They are a quasi-political organization, to my understanding. I mean, I'm not an expert on the region, but I'll give you my take. That they are largely funded and trained by Iran. They also operate in Syria. So these folks, the Wall Street Journal was reporting that top Hamas and top Hezbollah leaders claimed that Iran was involved in the planning and execution of these attacks. That was the Wall Street Journal. So, mainstream Western media, do you have to take what they say with a grain of salt? 100%. But that, combined with the fact that we're now sending a carrier group to the Eastern Mediterranean, which, by the way, also puts them nicely within striking distance of the whole Ukraine thing, that's how Iran would get involved. Senator Lindsey Graham made comments to the effect yesterday on Twitter that if there is evidence that Iran helped to pull off these attacks, that the U.S. should target their oil infrastructure because that's the lifeblood of their economy. Now, of course, if that happens, you can expect the price of oil, one, to explode because Iran exports something like 2 million barrels of oil production per day. So, it's a decent chunk of global supplies. Also, they're not going to sit idly by while their oil infrastructure is attacked. And who knows? I mean, they may have sleeper cells anywhere. The Iranians are into asymmetrical warfare, that sort of thing. So, it's a very touchy situation. I really don't think markets are taking this into account yet, but they're likely going to once these events continue to play out. But yeah, don't expect this conflict to de-escalate anytime soon. There is... Oh, and then as for the part about Saudi Arabia, well, Saudi Arabia did come out with a statement saying that they supported the Palestinians. So it looks like they're done with the normalization talks with Israel, and likely, the leader of Hezbollah, he came out with a statement basically threatening anybody who would attempt to seek normalization with Israel, kind of a none too veiled threat at Saudi Arabia. And Saudi Arabia has to be concerned about domestic issues. I'm sure the population of Saudi Arabia disproportionately supports the Palestinian side of this conflict. So, they've got to be careful about what they do in regards to Israel because they don't want to antagonize either their neighbors or their own domestic population who likely have pretty strong opinions about the Palestinian-Israeli conflict. So I don't think that we would be at war with Saudi Arabia if we get into a war with Iran initially, but I mean, who knows? I mean, when these things start playing out, Saudi Arabia is joining the BRICS. They've negotiated a peace brokered by China with Iran. So I'm going to say that they're kind of in the opposite camp, maybe just not in as bellicose a way as Iran. It gets kind of complicated with Saudi Arabia, but I think that they are definitely leaning more towards the global south and moving towards away from their alliance with the U.S., especially given the fact that the New Deal that Biden had been trying to broker with them to defend the petrodollar, to get them to agree to only accept dollars for oil, was kind of contingent on the creation of a Palestinian state and concessions from Israel. And I don't think that's very likely, given the fact that Israel is currently involved in laying siege to the territory that would have been that Palestinian homeland. So I think that deal is done. And Steve LaPointe says gas will be way over $5 a gallon. Yeah, like way over. If we go to war with Iran, there may not be gas. So, fill up your tanks now, folks, and maybe invest in a bicycle. Because, yeah, if we go to war with Iran and that also draws in the rest of the Middle East, there may not be civilian oil available. There may be lines, there may be rationing, there may be price controls. I mean, all of that is 100% within the realm of possibilities if this conflict escalates. And it seems likely to me that it will. We'll have to take it day by day, but I don't think that markets are pricing in the level of risk here just yet. And I think that, unfortunately, we're going to find out how risky this situation really is. But that's pretty much it for today, folks. Thanks for tuning in. Stay safe. Make sure you're getting prepared because things are getting pretty dicey out there. And stay safe, happy stacking. I'll catch you next time. Smart Silver Stacker out.